Hi, my name is Larry Dignan, and I'm here with Cowbell CEO Jack Kudale and Chief Product Officer of Corvus, Mike Lloyd. Hi, guys. Thanks for joining me.
Thanks for having me.
Thanks for having me.
So, both of you recently raised a nice, hefty round of VC funding for cyber insurance. And so I guess you just want to walk me through, the value prop and why you think the market's ripe for disruption. I guess we can start with you, Jack.
Yeah, no, I appreciate being here, Larry, and thanks for a great question. For us, from the uh, get-go, we decided to natively integrate data, AI, and proprietary ratings factor in everything we do. And this entire vertically integrated platform that Cowbell sits on is given us a lot of opportunity to innovate in a market that is so ripe for disruption. And couple examples that I would give, Larry, is uh, you know about 100% of our small commercial business is machine underwritten, and second, we have gone so far beyond just writing cyber based upon employee number and the revenue of a business. So now you can get a binder in less than 5 minutes, which is really aligned to the cyber risk as opposed to any other technographic information. And then now you make distribution so easy, right? We're looking at about 5,000 agents and brokers that's sitting on Cowbell platform. Today, we believe in admitted product. There are such a tremendous insurability gaps in the market. We're now in about 40 states. If I sum it up, everything, it's really about the differentiation that you want to bring in the market as opposed to the size of the round. And we're very proud of not just what we're doing in the market, but how the market together is moving along. And you have this opportunity, it's a perfect tailwind, but more importantly, be able to protect the businesses that historically the take-up rate has been pretty low, sometime in single digit, if it not in teens. So the opportunity for us to be able to secure right investing partners at the right time is amazing, so we can continue to innovate. I think that's kind of a core theme for us as a team Cowbell here in Bay Area.
So, Mike, do you want to walk us through Corvus and kind of what, your take on things is?
Absolutely. Again, thanks for having us. When I look at the venture capital activity in the insurtech space, and specifically for companies like Corvus and Cowbell, I think it really speaks to the opportunity that we all have to really make a difference in insurance. And so, there's just so much more that technology can do for insurance, and Corvus and Cowbell are doing what we can to bring those technologies to market. And for cyber insurance in particular, it's just such a ripe area. It's a product line that's growing very quickly. The risks are very dynamic, and it really lends itself to a digital solution. So when you look at Corvus and what we've been working on for the last 4 years, it's really building out a playbook in terms of how to tech enable, use unique data, great software product user experience, and bring that to market for cyber insurance, and then replicate that over other product lines. So the opportunity is massive, and we're just really excited for the journey ahead. And we think all the venture investors that are investing in all of our companies are as well.
So, just to follow up on that theme, I mean, the take-up rate for cyber insurance among small businesses hasn't been, there's been a lot of growth in the market because there's been a lot of attacks, and, large enterprises are pretty much insured, but everybody below that, not so much. Why do you think that is, and what are you trying to solve for?
I'll start first this time, Jack, I suppose. So I think there's a number of reasons. It's not an insurance product that is required. Sometimes it's contractually required for some businesses, but not like a workers' comp or general liability type product. It's not necessarily mandatory. And so because of that, I think many companies that are looking to save some money here and there on their insurance are just denying the coverage. Over the last handful of years, though, we've seen that start to shift, but we're still in the early innings with it. And more and more companies are buying cyber coverage for the first time, and more companies are buying more of it than they've had before. And so I think there's a number of things that are making that happen. One is the headlines, right? You open the newspaper, it seems like every other day, there's some sort of event that may instill fear into some of these business owners, and they want to make sure that they're not on the receiving end of one of those. And so it's a little bit fear driven, but it's something that we think is there's still a lot of runway for us to give more coverage to the market and help protect those businesses.
Jack, why do you think SMBs haven't been quick to cyber insurance?
Yeah, I mean, first of all, if I just take a step back, Larry, this market, the market is still in its infancy. You look at cybersecurity market that we all witness in front of our eyes over the last decade, blossom to this $140 billion market. Cyber insurance is 20 times smaller than a cybersecurity market. And then yet you have cyber is like the most technology savvy line of product among all insurance lines. And this is also one of the, maybe possibly just one of the two lines of insurance that has an organic growth. So you don't have to replace anybody else to get into this market. So, and then you have this continued attack. I think for SMBs, the take-up rate is definitely, I mean, we saw the turn from 2020 into 2021. I think we all saw that market. I mean, that's the market that we predominantly operate into. It has gone from single digits to high double digits. I would say teens in terms of the take-up rate. I mean, predominantly, it's been really difficult to obtain cyber insurance, Larry, for anybody. I mean, you got these long, lengthy applications. Now you have SolarWind applications. Now you have Microsoft Exchange supplement. You have ransomware. So that's been hard. Market has a supply problem today. It's not a demand problem. And now we go on beyond, like Mike said, contractual obligations and fear. So we're starting to see that happening because of the pandemic. Now the attack surface is just ever increasing. And so there are people buying cyber now beyond fear and beyond contractual obligations. So we're starting to see a really good, and that's a testament to all of us. And I mean, this, organically, we have grown tremendously over the last 6 months or last year or so. So it's growing, but it's still not there. And, you have a lot of other things that are coming into the market. Regulators, for example, you heard New York DFS has a guideline for insurers. California is looking to make cyber mandatory. US Congress is looking at the Solarium Commission, Cybersecurity Committee, and all that stuff. So there is an exponential growth in the SME market, which has triggered like late last year, and this is going to continue. That flurry is going to continue for a really long time.
Mike, do you think cyber insurance is going to be a regulatory requirement?
I am not sure if it's going to be a regulatory requirement, but I do think it will eventually look like one in terms of how many businesses buy it. So I do think that this sort of take-up rate increase that Jack's talking about, we should certainly see as well, will continue, and it'll look like one. There are certain states, like New York in particular, that are more progressive with what they're requiring their businesses and companies to do on the cybersecurity front, and including cyber insurance in that as part of that will likely become more common in many other states. But I think it'll be a long time, and I don't know if this is a regulator pulled event in terms of becoming more and more common. I think it's going to be driven really by the need for companies and businesses to become covered with cyber insurance.
Okay. So both of your companies sort of have a software monitoring kind of hook to them. How important is prevention to your business in terms of, yeah, you're an insurer, but, the more you can monitor, stay ahead of threats and things like that, obviously, the better it is for all parties. I guess walk me through the interplay between insurance and software with your companies.
Yeah, if you like, Mike, I can go ahead. And I think I mentioned cyber is like the most technology savvy line of product. That means everything is bits and bytes. The entire property that you cover is tech. Uh, and then you look at the overall life cycle of cybersecurity. You going from prevention and detection to response and recovery. So cyber insurance has really extended that cybersecurity life cycle much farther into how it has been developed over last, uh, let's say, decade or so in terms of cybersecurity. The role of software and monitoring, I think, look, there's a lot of money spent in cybersecurity. Almost, unless you're a dry cleaner, a restaurant, carpenter, electrician, like smaller businesses who maybe don't have a lot of compute out of, let's say, Office 365 or Google Cloud, or maybe QuickBooks or whatnot. Uh, but this idea of, I mean, we still puzzle. I am puzzled, and it's basically premise for us to start Cowbell. Is cyber is still underwritten once a year. It is just unacceptable for a long term because the risk is changing and evolving so much. And now you think about what is the role of software and monitoring. This idea of continuous risk assessment, making sure that your exposures are aligned to the coverages, because the policy that you activated maybe 6 months ago, those coverages may not be aligned to the exposure because your exposure has dramatically changed. And that puts a lot of onus on, what we would call it closed loop risk management. And that means monitoring continuous risk assessment. Now, I am not advocating that prevention or cyber insurance is a substitute for prevention and detection. I think you have to strengthen prevention and detection more. But as a cyber insurance partner of a business, you want to be able to offer continuous risk assessment, which is, by the way, the biggest void in the market when it comes to traditional insurers in the market. Is there's a lack thereof risk intelligence and the disconnect of the books with the risk that has been underwritten over the last 4 or 5 years. So I think, and it's proven for us, is the continuous risk assessment and the monitoring, if you will, is a core to the underwriting business, as opposed to what we used to call ostrich underwriting that has been going on for a long time.
So Mike, what's your take on the monitoring and insurance intersection? And do you see a day where we can kind of adjust rates based on behavior?
Yes, I do. And when you think about software and monitoring, I think there are a lot of different ways that software and monitoring can help throughout the value chain, from brokers to policyholders to risk taker, risk capital partners. But if we look at really the policyholders for a minute, and I think Jack was alluding to this with the continuous risk management, is we can see quite a bit externally about businesses and customers, and that can give us a picture in terms of what some of these companies are doing well and not so well. And we can become an active partner with them. And so there's a term here at Corvus that we call dynamic loss prevention, and it's really hammered into the DNA of what we do. And dynamic loss prevention to us is, for this dynamic risk of cyber, we are constantly communicating with the brokers to the policyholders to help them shore up any weaknesses that we can detect or see. And it's actually been great because as of the last really couple of years, there have been more and more companies that are interested in this service. And they're very thankful when we can see something that they should fix, and we alert them of it, and then they can go and fix it. I mean, one of the great things is there's full alignment up and down the value chain here. Nobody wants a claim, right? Nobody wants to be breached or have to deal with this. And because of that, we're able to be a pretty powerful player in that value chain and bring software and these monitoring tools to pretty much everyone. But the policyholders in particular benefit the most because we can stop bad things before they happen many times.
What happens I guess, how important is the ecosystem when it comes to, building out remediation and monitoring and, because when a claim's filed, you got to fix it somehow, right? So is it up to the insurer to build that ecosystem of partners to sort of go in and fix things, or is it the customer's responsibility? I've kind of seen a little mix of both, really.
Mike, you want to take that?
Yeah, sure. So yeah, we can't do it alone, right? I think it does take an ecosystem of vendors to protect the many different ways that a cyber attack could happen. Now, in the event of a claim, there are pretty tried and proven incident response, breach response, forensic type units and services that are out in the market. And we definitely see those as very important parts of the overall cycle of a cyber event. And so, yeah, we think it's critical that the ecosystem is strong, and we're one important part of it, but we can't do everything. And so we definitely really lean on a vibrant, good ecosystem to help stop the cyber criminals.
Yeah, and just to chime on that, Larry, in addition to the partner ecosystem post-event, we also rely on a tremendous number of partners. I mean, you look all the way from data providers, so you can collect data for your underwriting. You rely on cloud providers. Almost everyone has some form of cloud footprint, whether it's the Microsoft, Google, Amazon. Being able to hook into those cloud providers, cybersecurity providers for remediation. And then you have cybersecurity awareness and training. I mean, most of the stream of attacks is really cause of weakness in terms of phishing or email compromise or whatnot. So we rely on this partner ecosystem. Is the onus on cyber insurer to build that? I think we play a big part into that process. And for us to extend the life cycle of cybersecurity and get benefit out of it, the partner ecosystem, no one company can do this alone. So a tremendous amount of resources and effort is going into building these partner ecosystems in the market.
How does a cyber insurer think about ransomware payments? Good idea, bad idea, only choice? I guess from an insurance perspective, how do you think about it, and how should the customers think about it?
Well, we want to prevent the ransomware event from even happening in the first
Right, exactly.
So we invest a lot of time and attention on that. And so at Corvus, we've developed something we call the ransomware risk score. It's a specific look at this monitoring software that you alluded to earlier in the conversation that's focused just on ransomware. And so we use that and many other tools to help our customers ideally prevent that from even happening. And in the event that it does happen, we also spend a lot of time before ideally an event happens teaching best practices to companies if they aren't already employing them, such as backups. So there's actually been a decrease in ransomware payments being made because more and more companies have backups that could fall back on those and just avoid paying the ransomware altogether. So that is a big part of what we do. What can we do before a bad event happens to make it so if that event happens, it's not as disruptive as it otherwise normally would be.
It's also ransomware payments, just the tip of the iceberg. The business interruption that follows, the expense that's required to do crisis management, PR, the expenses that are required for notification if there is a large number of consumers set involved, credit monitoring if it's required. So this is a long tail of beyond ransom payments and triggered by ransomware. So you want to incorporate, like as a business makes a decision to invest in cyber insurance, and as the insurers underwrite those cyber ransomware coverages, you're looking at not just ransomware payments, but you're looking at much more beyond the ransomware payment in terms of you know just protecting from the cyber crime that's becoming more and more of a business these days.
Okay. What keeps you up at night?
Particularly for me, among many other things, I think, it's the mission of insurability gaps, all right? And I bet that's also what keeps our customers up at night. And when I meant by insurability gap, I'm not saying that, the products we do have a supply problem in the market. There's no demand problem in the market for sure. But I'm not saying that coverages or the programs, I mean, we all take pride in our products. I mean, I bet Mike feels he has the strongest product in the market. I feel we have the most robust product in the market. But, with the attack surface increasing so dramatically, and the risk is evolving so fast, the exposures are not always aligned. So there is so much of insurability gap. So when I'm thinking every day, how can I make this better? Whether it's in terms of closed loop risk management services, whether it's in terms of adding more coverages, whether it's simplifying a coverage in a more clearly worded, whether it's increasing the closed loop or continuous risk assessment for the customer. So I think the insurability gap that was so wide before 3-4 of us entered the market, and we are almost like late entrant. I don't know if we call it the last mover, but the late entrant in the market. We entered the market about a year ago. So the gap is reducing, but at the same time, your attack surface and threat landscape is increasing. So that does keep me up. It worries me, and I know it worries me because it worries our customers and our policyholders, the thousands of them out there. So that's the most critical item for us as we go about day to day at Cowbell.
And Mike, what keeps you up?
So what keeps us up is just there are so many business owners out there who don't want to deal with a cyber event. And yet there are all these bad actors in the world who are trying to prey on them and find a weakness and exploit it and disrupt these businesses from their normal operations. And what can we be doing to help prevent that? Keeping that, and the fact that those bad actors are dynamic and they're not a hurricane, that is driven by physics. This is, unfortunately, bad actors are driven by greed and other selfish things. And because of that, it makes them quite nimble. And so it means that we need to be really nimble and we need to move quickly and try to get ahead of them and do that on behalf of our policyholders and be their partner. So what keeps us at night is just trying to keep ahead of those bad actors and help our policyholders and really lean into our mission, which is to make the world a safer place. And the way we do that is to help predict and prevent claims, bad things from happening in the world. And so there's a lot that we can do. We're just getting started, but we're pretty happy with the progress we've made over the last 4 years, and we think that we're on a really great path to continue to complete that mission.
Okay, thanks for joining me.